So we're going to be talking about chapter 15. We're going to be talking about the primary market and the secondary market, okay? So here's what happens. I'm going to start drawing a couple pictures, okay? And remember I told you a couple on the last class when we were doing chapter 13 that I want you to remember how a mortgage works, all that kind of stuff. So here we have the bank, okay? I draw this big building with money in it, all this money, okay? Now here's what happens. Bank gives the borrower, happy little borrower here, okay, gives them money, okay? Remember we said that? We said they give them the loan, okay? Then what happens is the borrower gives the bank, okay, the note or the promissory note, which is basically the IOU, and the mortgage, which is basically the pledge of real property. So the home that they're buying over here, their little house, okay, basically saying, hey, if I don't pay you in accordance with the note, okay, if I don't pay you in accordance with the note, you could take my home as repayment for the loan. So now what happens is this. There will come a time where the bank will have no more money in there, okay? And all they will have are notes and mortgages, okay? They will only have notes and mortgages, okay? So here it is. They're sitting there with this and no more money to lend out to the buyer over here, okay? So that makes that buyer pretty sad. And the bank's pretty sad too. They're like, I gotta wait like 30 years for this money to come back to me. And it's coming back to me over time from having the note and mortgages from this person, but we need more money for this guy so that we can make them happy, okay? So here's what happens. The banks, okay, now think about it this way. If I told you, and this is actually a true story, my family used to own a guitar shop. So my family used to own a local guitar shop, and I'm actually going to put them there, and I'll just put musical notes in there, okay? Little musical notes. So what happens is they would sell a guitar to someone, okay? They would get money back, okay? And what would happen is they would then go to Fender or Gibson, and they would say, hey, we need more guitars. We have all this money, and we need to turn it into guitars to stock the store. Everyone understands the basic retail principle there, okay? Everyone understands you sell a product, you get money, you buy the product at a lower price to restock the shelves, life goes on, okay? But here, when we're talking about money as the product, okay, and notes and mortgages as the byproduct of it, what happens is who's turning around and buying those notes and mortgages so that the store could get more money, so that bank could get more money to give out to that little buyer over there? And here's what the story is. That is going to be our secondary market. So the primary market is lenders, okay? So the primary market is lenders, people who are lending money. That is what makes up the primary market. There are private and financial institutions in there, okay? So there are mortgage brokers, mortgage bankers, that kind of stuff. So let's do a little erasey. And what we're going to talk about now is this. We're going to talk about where the banks go to get that money, okay? So we just mentioned the primary market. Great, fantastic. Now we have to talk about the secondary financing market, okay? The secondary financing market. And the secondary financing market has to do with three different entities. Fannie Mae, and I'm going to use their abbreviations because that's where you're probably typically going to see them referred to. I really highly doubt that you will ever hear them referred to as their full name, but I will tell you their full name. Fannie Mae is the Federal National Mortgage Association, okay? So Fannie Mae is the Federal National Mortgage Association, okay, is the Federal National Mortgage Association. And what they do is this. They purchase notes and mortgages from the primary market. So that bank is left with a loan, and they could do two things. So here's what happens. Technically, what the banks do once they lend out that money, they make a decision. Are they going to hold on to this note? Because a percentage of their portfolio is going to be notes that they just hold on to, okay? Notes that they just have. And they're like, sure, you know what? We'll wait for this to mature in 30 years, okay? And we'll collect the money every single month and all that kind of stuff, okay? But there's going to be a percentage, a large percentage of times where they're going to turn around and sell the note or mortgage on the secondary market. Now, what happens is this. They usually sell it for more than what it's worth. I mean, because it's a business, right? So what happens is if we had a $100,000 mortgage, okay, and I'm using fictitious numbers, guys, they might turn around and sell it on the secondary market for $105,000, okay? And why is that beneficial for someone on the secondary market? Well, over the course of 30 years, they might be getting $185,000 back. So everyone's winning a little bit, okay? So what Fannie Mae does is they are also, the reason I start with them is they are the largest purchaser of notes and mortgages on the secondary market. They buy 1 out of every 10. And now that might not sound like a lot, but when you start to think about it, that's a lot. So they are an amazingly big influencer on the market. So much so that they set guidelines as far as what they are willing to purchase up to, okay? They put guidelines in there for what they're about to purchase up to in every county. And any loan above the Fannie Mae purchase limit is going to be considered a jumbo or non-conforming loan, okay? And Fannie Mae purchases all different types of loans. So they purchase VA, they purchase FHA, they purchase conventional. They do kind of cherry pick here and there, okay? They usually pick out the larger ones, okay? And they usually work with the larger lending institutions, okay? So that's Fannie Mae. The next one on the secondary market is going to be that of Freddie Mac, okay? Also known as the Federal National Mortgage Corporation, okay? They're a smaller Fannie. They're going to deal with probably some smaller lending institutions, private lenders. They're just a smaller Fannie. As far as what you need to know for the test, they're a smaller Fannie, and these two are the purchasing entities on the secondary market. The next one is Ginnie, and that's the Government National Mortgage Association, okay? So here's the thing. Fannie Mae, Freddie Mac are not government entities. And here's the thing. Some people might argue with me and say, no, Stu, they're definitely government entities. They're quasi government entities, okay? They're quasi government entities, okay? So what happens is this. They are private corporations, okay? They are private corporations. However, okay, what happens is this. They're actually private corporations. So Fannie and Freddie Mac are private corporations for all intents purposes, because how they get money is they're selling shares of the corporation. They're selling bonds, stocks, things like that. So what happens is you could buy into Fannie Mae as an investor, okay? So you could do that. You could buy into Fannie Mae. You could buy into Freddie Mac, okay? Ginnie's a little complicated. Ginnie's one of our newer entities on that secondary market. And here's what she does, okay? Ginnie basically does this. She sits there on the secondary market and she entices Fannie and Freddie to purchase some of the lower end loans, okay? Some of the lower quality, so some of the FHA that they might not normally want to touch, stuff like that. And they do that through the sale of what's called pass-through certificates. So Ginnie she doesn't buy, sell, or lend. She doesn't do any of that stuff, okay? And here's the thing. Fannie and Freddie do not lend money. However, what they do is they purchase on that secondary market. Ginnie is the government entity who just kind of greases the wheels and makes everything go. So, does that make sense, guys? Are you guys following me? Oh, as I erase everything. Does that make sense? Are we good? All right. As far as chapter 15 goes, that's really what I want you to know and learn, okay? There wasn't much to it. I really want you to focus on that secondary market. So I'm going to stop my recording now.